Hey guys, what's up? Welcome back. Today I'm going to be teaching you guys everything you need to know about top-down analysis. For you to become a professional and a profitable forex trader, you need to know everything about top-down analysis. And the question is, what's top-down analysis? Top-down analysis is analyzing from the higher time frame down to the lower time frame. So when we're talking about the higher time frame, we're not talking about the 4 hours like I always talk about. We're talking about the weekly, the daily, down to the 4 hours. Now, when we're talking about top-down analysis, we're actually talking about from the higher time frame to the medium time frame to the smaller time frame. And what the higher time frame? What's the higher time frame? The higher time frame is what? Your direction. The higher time frame, I told you, is actually very correct, and you actually use this to see the market direction. Then the next thing, you look for the middle time frame here, and you actually use it for your setup. You actually like plot your trend line from there. Then you go down to the lower time frame and you use it for your entries. So we have GBP USD, actually my favorite currency pair. So what I'm going to do right now is I'm going to be analyzing with you guys so that you guys also can learn how to analyze. So the first thing we want to do is to go on the weekly time frame. I told you the higher the time frame, the more accurate your trading prediction is gonna be. You guys understand? So this is actually the weekly time frame. From here you can even see 2017 and down to 2024 that we are currently. So we can see our market has been moving like this. We can't really say market is moving in a bearish, like on the long run. We can't really see, no, we can see market has been moving on a downtrend, like on the long run. Taking a look at like looking at this, right? But all this doesn't matter anymore, because before all these markets will play, it's going to be a very long time. Do you guys understand? Because we're since 2010 year, we're since 2022 year. So we're just trying to like look at it and say, okay, what is market doing? So from here, from 2023 to 2024, as you guys can see from here, you can see the market has been moving in an uptrend. And looking here, you can see here that there's high possibility that markets might go to the upside, because market has actually like been in the upside in the past. Do you guys understand? So looking at this, we can see that, okay, market is actually on the upside. Looking at it on the weekly time frame, look at it here, W. So from the next thing we're going to do is, we're going to what? We're going to move to the daily time frame. From the daily time frame, we can now start looking at candlestick. We can now start trying to like draw our setup and all. So looking at this also, we can see that market has been moving in what? In an uptrend, like the weekly time frame actually showed us. But that doesn't mean we are going to start saying we want to like place an entry in the daily time frame, because for swing traders, people that actually hold their trade for that's days, weeks, months. This is actually what they use. They use the daily time frame to take entries. You understand? At this point in time, they might be looking for a sell, some people might be looking for a buy, and so on and so forth. But what we just want to do right now is we want to see what market is doing. And using the trend line is actually, for me, is actually the first. So we'll try to like use the trend line to say, okay, market has been what? Going up in a market has moving in an uptrend. You guys understand? So market might actually like go up to this place before it comes down, or because this place is actually an area of value, market can start coming down. So at this point in time, we've seen that market is moving in an uptrend. So what's the next thing that we do? I told you guys, always try to identify your areas of value. You understand? You try to use your rectangles, draw your areas of value, places that market has actually what? Rejected in, maybe it has a support or a resistance in the past. You guys understand? So we're looking at something like this, but because of the simplicity of the chart, I'm going to be using lines so you guys can see it very well. We're going to be using lines. I kind of like lines a lot, but I use rectangles anytime I'm doing my own personal analysis. So what we're going to do here, we're going to put this line like this, because market actually acted as a what? Like a resistance here, and as a resistance here, came here after that the support, and market has actually been acting in these zones. So the next one we're going to see is, we're going to go to the 4 hours time frame. We're going to go to the 4 hours time frame. Then from here, we can now start seeing what market wants to do. So the next thing we're going to do now is we're going to see that market has been moving, even though it has been moving in an uptrend. I told you inside the trend there is a trend, and inside that same trend there is a trend. So in as much as market is moving in an uptrend, there is another uptrend again. So I'm going to plot this like this. So market has been moving in this uptrend, as you can see. Yeah, market moving in this uptrend, and again we can clone this. Some can make it. Sometimes you can actually make your trend line 1, or you can make it 2. You guys understand? So you can actually draw it like this. I told you a trend line is very strong when it has more than 3 touches. So looking at this, we have 1, we have 2, we have 3, we have 4. Even this also, we have 1, we have 2, we have 3, we have 4. So I put my ask that, okay, what about this? What about why is this one outside this trend line? It's because when market actually started this trend, market was not actually moving in an uptrend. Market was coming in a downtrend before in the past, like this. We can actually spot the market was on a downtrend before. Take a look at it. So market was in a downtrend before. Then what the markets do, let me show you guys. Let me try to clone this. Look at it. Market was actually in a downtrend before. I told you it's all about higher highs and lower highs. So take a look at this. Market was in a downtrend before. You guys understand? So what happened before? Market went up, it came down. Okay, wait. The market went up, came down, went up, came down, went up again, came down. At that point in time, market refused to what? After market went up here, let's say market went up here, market refused to like break below the lower low. I told you a downtrend is when market goes below a lower low. So market actually, let me try to pick my tool. So we saw market go up, so market come down, so market again go up, market what came down, yeah, market went up. For the downtrend to continue, we're supposed to see market break below this lower low, but market didn't do that. What did market do? Market stopped there. You understand? Acted in this area of value. As you can see, market has been reacting to this zone, and a lot of this. I told you about wicks. Market showed up this week. The market started going up. You guys understand? So market went up. Market came down. Let's say yeah. Came up again, came down, and now at this point in time, market is actually acting very funny here. So what I'm going to do right now is to delete this. So what did the weekly time frame tell us? The weekly time frame told us that market is what's moving in an uptrend. So when we actually moved down to the 4 hours time frame, we moved to the daily time frame, market still showed us that we are moving in an uptrend. We went down to the 4 hours time frame, and yes, it's actually telling us that market is still moving in an uptrend. So at this point in time, the next thing for you to do is try to spot your area of value. Do you guys understand? At this point in time, we're going to like put a line. We're going to like put a line right here. That's why I told you using lines are not very, very accurate. You guys understand? Because sometimes it can be, we can actually call it a zone. We can actually put another line in between. Yes. And we can see when market got to these places, market actually reacted, then it came down. You understand? Market can break above a structure or an area of value, then it will give us a very long wick, it will show us a very long rejection, the market will start coming down. So at this point in time, you can see market went up, came down to this area of value, went up, came down. Again, this piece is still an area of value because we are in the 4 hours time frame. So we saw market went up, came down, went up again, came down to this area of value, went up, came down, went up, came down. Now, what market is trying to do is we're going to try to move to the 1 hour time frame. You understand? So now you've gotten the view of the market from the higher time frame, from the highest time frame. You understand? From the weekly time frame. So at this point in time, I told you the next thing we want to see is we want market to actually break structure. You understand? Now, market has actually broken structure here. A new higher high was actually formed when market went above this previous higher high. You understand? Market came down, and market is failing to actually break above this higher high. You understand? So at this point in time, because of these candles, we can actually see that there's a lot of selling pressure. We can expect market to sell maybe to this region, to this trend line, or back to this resistance zone. Do you guys understand? So let me try to replay this. Let's try to replay this. You understand? So let's replay this. So let us imagine that we did not see what happened before in the future. And if we were to do top-down analysis, what were we going to do? So, I can tell you, trading is very sweet, but at the same time, it's come with its issues. So, now, market went up, right? Market came down here. Yeah. We saw market go up, following this trend. The market came down to this place. Why is this place an area of value? Because market actually stopped there before in the past. You guys understand? Now, fully well, we know that market is actually going on an uptrend, knowing that, okay, number one, the trend, number two, this rejection here, and number three, the candles. You understand? You can see at this point in time, market wasn't able to go anywhere below. You understand? So after you saw these candles, little candles form, you can now say, okay, market wants to keep going up. But the next thing we're going to know is that market actually wants to come here. Why? Because of the past. I told you what happened in the past that we used to tell what is going to happen in the future. So we have this. So market is actually going to come here. Then when market comes here, I told you, market doesn't just move in a straight line. You understand? Market goes up, comes down, goes up, comes down. You understand? So when market comes here, what's the next thing we're going to do? What is the next thing we're going to do? We're going to expect a sell. You understand? But I told you, I'm a kind of person whereby I try to take my profit at the closest support or resistance. Do you understand? I'm a day trader. I like to get into the market very early. If it's possible, get out of the market very, very early also. I'm not looking for 100 pips or 200 pips. For me, 30 pips, 50 pips, 70 pips, if possible, sometimes even 20 pips. Do you understand? So, yeah. So, what the market actually do when it came to this point? So that market went up, like I told you, it went to this place. So, at this point, we would have entered for a sell. Why? Because market got to an area of value. We saw this rejection. Then the next thing is markets. Let's keep playing. Market just kept on playing. Kept on playing. Then what did the market do? It came to this area of value. You understand? It came to this support. You understand? I told you it's the next support, the nearest support. It's possible because the market can be coming can be coming towards this direction, but that is not our goal. Our goal is to take profit at the closest resistance. You guys understand? So we have something like this. Even this is actually a lot. This is about 93 pips. You understand? 93 pips. So we saw market from here. Market came all the way from here. So now, because we actually know that market is in an uptrend, the next thing we're looking for at this point is we're looking for a buy. Do you guys understand? So let me move this a bit lower. I'm looking for a buy. So what are we going to do? Wait to see candles. Wait to see what momentum. Wait to see buyers come into the market for it to actually buy. So let's see what market did. From here, you can see the little candles. I keep emphasizing on this. Take a look at the little candles that has formed. At this point, you could see how strong the body of this candle was. You understand? How red they were. So at this point, market started forming this little candle. Then the next thing we saw, this candle to the upside. So we knew that, okay, at this point in time, it's time for us to buy. You understand? So we place a buy. Try to put it at your little support. You can put it here. You can put it here. Why? Because market was here, market was here, market was here. Do you guys understand? So try to put this here. I'll try to put this here. You understand? So risking about 20 pips. I like to risk 20 pips. Very soon I'll teach you guys about your risk management. So what do we see market do? Market kept on going upward because market is moving in an uptrend, like I told you guys. Market played a bit, as you guys can see. Played a bit. Market's coming. That's why you guys can see how market is playing. Market doesn't. I told you, the market doesn't just move in a straight line. You understand? Market plays. You understand? There's a lot of manipulation in the market. So once you leave your trade, you allow it to play. You understand? Don't allow emotions. Don't allow. I want to add positions. I want to do this. No. Risk management. I'm going to teach you guys. But first of all, when you place your trade, you can stack. But when you want to stack is when market actually comes back, when market actually retrace. You understand? Now we actually see that the general trend of the market is a big buy. Do you understand? Market is moving on an uptrend. Do you guys understand? Now after we zoomed in, we saw another trend, another buy trend inside the buy trend. You understand? Now, even though we are actually placing a buy in this buy trend, you could see that market actually went up, came down, went up again. Market is actually forming another trend even inside the trend. So even though you are to actually stack, what stacking means is adding more positions. You understand? Let us say I want to place a buy on GBP/USD right now, and I put one lot size. Do you guys understand? As the market is going in profit, you can put another lot size, another lot size, another lot size, and this can actually increase your it can actually increase your profits. Do you guys understand? But at the same time, it is actually very, very risky, because if you actually bought from here and market got to this side, you would have been making so much profit. Do you guys understand? Then if at this point you bought again, expecting market to get to this level, you understand, expecting market to like get to your target, and market started going down, because of you actually bought here, you'll be losing so much money. You'll be losing so much money. So it's very, very important that what do? If you place a trade from here, you allow your risks to, you allow your trade to play out. You understand? And even though you have to stack a trade, or if you have to add another trade to your trade, it is actually when the market pulls back that you should actually enter again. So market play. Now see how market came down to this place. Now means if you would have bought from here thinking you are so close to your target, markets would have given you so much loss before it actually said it wants to go again. You understand? So then market smashed above our take profit, giving us over 93 pips. And since then, market kept playing, and there you have it, guys. This is how to do a proper top-down analysis. Some guys go down to the 30 minutes. You guys understand? From there, you still see more trend. At this point in time, the market looks more clearer. But the problem here is that you have a lot of, let us say, fake trends. Do you understand? Now, we could see a buy, and it's possible you are going to see a sell. Look at it. You're going to see a little sell in the market, which you can actually trade. But the problem is that it is not so sure. You understand? The higher the time frame, the more clearer your trading prediction is going to be. Do you guys understand? So this is how to do a proper top-down analysis. Try as much as possible to start from the weekly. Understand where the market is going to at first. Then the next thing you want to do is you want to go back down to your daily time frame. You understand? Go down to your daily time frame using crypto, using a different currency pair. Go down to your daily time frame, go down to your 4-hour time frame, go to your 1-hour time frame, go to your 30 minutes time frame or 15 minutes time frame to take your entry. You guys understand? And from there, that is how to use the top-down analysis strategy. It's something I've been using for a very long time, and it has like really helped me so much, and it's something I want you guys to also do. So I hope you've learned how to do top-down analysis with me. I'll see you guys in the next class. Peace, guys.